What's up, everyone? Welcome back. I don't know how long it's been. I think we're like a week out or 2 weeks out from the last time we've updated. And since then, I've actually posted the video, like the main pilot video, and I've also posted a couple vlogs. So now this is like real time. I'm being able to see how many people watch the video, how many of you new subscribers join, and all of you who joined the Discord. Shout out to all of you. That was pretty dope to see the feedback that I got from that video, which is, I believe, it's my most watched on the channel as of now. Plug. But we are going into our final week of the month, and if you don't know, I don't trade the last week of the month. That's more of a reflection and more of a, like game planning for the next month and being able to chill, catch up on some, work, whether it be trading related or gaming related, or enriching myself, which I bought 2 books this week that I'm going to be reading. One of them has something to do, well, no, both of them are both psychology. I don't have any trading books that I'm getting, but I will be getting some more trading books moving into the later weeks of the last quarter, and that's where we are. So to give you a time check on exactly how close we are to the end of the quarter, we're going to visit our little stopwatch, which I believe we are well beyond the 1,000-hour mark, well beyond. Let's see, 11:57, so just over 1,100 hours. And so far, I believe we're down 15%. We took a trade on USD JPY, and we also took a trade on, no, we didn't take a trade on USD JPY. I think we took a trade on EU. We took a trade on EU. We also took a trade on GJ, and those both got stopped out. And I think I took another one on Nas. I don't necessarily know. I'm going to check the account right now. But overall, I was happy with the trades. There were some moments where I could have done better, I believe. Like for GJ, I believe I could have moved my break even just a little bit quicker, or either that or move my stop loss just a little bit further away. But right now the accounts are down, like my big accounts. The only account that's in profit is the futures account. And to show you, we're down 342 overall on this Forex account. So we're at like $277. And then for my futures, which I have on my other broker, which I still haven't withdrawn from this brokerage yet for futures, and I'm thinking about doing that pretty soon, but I want to get a little bit more into profit and then withdraw like a good amount. On this one, we're up just around $79, so we have 358 in the account, which we started with like 250, I'm pretty sure. Let's see. Yeah, 286 is what we started with, and we're at a balance of 358. We were at a higher balance of around 490. Yes, 491 was the highest balance that we were at. And we took a dip from a couple, I think I took a couple gold trades. Let me see. Yes, we took 1 gold trade, and that's it. So since our last time that we checked in, we only took 1 gold trade. So these are scale ins here, here, here. 0.03 is worth a lot of money on this account, on this particular brokerage. So the leverage is a little bit higher, and we're able to make a little bit more. And I have to do a withdrawal so then I can be able to recommend them and see like how everything goes, which I've used their subsidiary brokerage, which was called like LQD FX. And I can say that because, I use them, and they're shut down at the moment. So there's no more LQD FX, but they were their liquidity provider. So I feel a lot more comfortable with them because I have history with them. LQD was really great. Like they would call you. He had your own account of managers and everything like that. So I'm gonna try to do a withdrawal probably next week or something like that, or I might even do it today just depending on how I catch up on everything. I want to do a breakdown. We haven't won any trades, but in the last check-in, we did say that we were going to do a breakdown. We still haven't done that breakdown yet. I haven't even hopped on the charts since I don't even like whenever I'm doing my trading, that's when I'm on the charts, but I haven't sat down and break down anything. And I forgot to do a pre-market, post-market analysis that we were supposed to do a long time ago. I'm gonna try to work one of those in a video. I don't know if it'll be the next video or if it'll be like a continual type of thing, or maybe it'll just be like a one and done situation, or whenever I'm feeling like it, or whenever I have the time. It really just depends on workflow and how I manage that, essentially. But we're going into the last month of the quarter, and I'd say I learned a lot. Like we've switched how we analyze. Well, we didn't necessarily switch how we analyze, but how we receive data. Because before I was so afraid of trading anywhere near, like having positions open anywhere near any type of news where there's major impact expected. And something like just dawned on me with my gold trade, where I no longer wanted to be afraid of economic data, because when you don't know what economic data, even how it plays a factor into your trading, it limits you. You're either going to gamble it or you're just going to stay away from it completely because you're afraid of what's going to happen. And I always had the impression that, which I took this from like another trader who spoke on it once, was that whenever a red folder drops, the market reacts to the news, it returns to where it goes, or where it was going previously, which is not true. It's not always true. And that took me diving deeper into what economic data is. And when I say I learned new stuff, it's literally from me researching. It's not like I'm going and buying a course and I'm going and learning from this and this. No. I'm researching, especially in the time that we live in. We have AI. So a lot of the like new things that you want to learn, you can learn from AI. Not saying that it's always 100% correct. I would fact check a lot of the things that they're spurting out to you, but and use it in like a application sense. Like using it in real time to see if it works, and you test that against the data that you do have, and then move on from there. But I've been leaning more into economic trading. Not like I'm basing my entries off of economic data. No. But what I am doing is getting my pulse on the market, which I've already been doing this entire time. It's like, how do I feel about the pound? How do I feel about the yen? How do I feel about the US? And I was going off of economics, like how the country is performing. Like, for instance, with the tariffs that just got shut down. Like those type of things that we're going through, and going through my airwaves, because I have Bloomberg, and I usually run Bloomberg every morning whenever I'm trading, or even like if I'm not trading and I just want to get a pulse on the market, that's what I'm watching. And I have Bloomberg on my phone. And once again, we're not sponsored at all. And that was a major like game changer for me, for like how I viewed the market. Like, I may not understand what the hell they're saying, but I do understand like certain, like the sentiment on the market. Like if everyone is having a negative outlook on the US economy, then I can use that with the price action data that I see, and then couple that with my entries, and then now I'm biased in that way. And that's the way how I'm using it. Like it's always what I've been doing, but now it's like more driven by data. So I've been getting really heavy into economics lately. Like I've taken like, I think 4 or 5 pages worth of notes. Just the basis of economics. I'm not learning how to trade fucking Chat GPT. Don't do that, okay? Don't try to learn to trade from Chat GPT. I've seen a bunch of people on Instagram talking about some AI trade bot or whatever. Don't do that, please don't. You're gonna get rinsed, okay? I will always firmly believe that the best way to learn trading and to execute is going to be off price action. Nothing more and nothing less. And it's just as simple as that. Just trade price action. And but what I am coupling that with is economic outlook and learning more about how like it plays into the market, which I just recently learned. Like this entire time, I dead ass thought that Forex was driven by the weight of currencies. And let me explain what this means. Like I always thought that, like for instance, GBP JPY, I always thought that it would go up just because the yen was losing strength, which that is a part of it. But there are moments where the yen drops complete strength, and so does the pound. But GJ goes up. So then now you have to start to think, well, how the fuck does that happen? If both are going down, how does the price of GJ go up? That's because you're looking at it from a trader's perspective, like a forex trader's perspective, a currency trader's perspective. You're not looking at it from a bond investor perspective, which the pound and the yen are moved by treasury securities. From my understanding, I could be wrong. If I am wrong, drop it in the comments. But from what I've stumbled upon and from what I've tested, it moves from the expectations of the bond market. So when the treasury yields are high and low, that's what's moving the the market. And treasury yields is for US, of course. For UK it would be gilt yields, but that's what's moving the market. And I used a comparison when I was talking to my wife about like when I was under like learning it. It was like looking at two different oranges. You know, if like one orange is $3.15 and it has a low juice output. Like when you get the orange, it barely take out any juice, and you know it's a little moldy on the outside. But then there's another orange that is the exact same price that's not moldy and yields more juice. Which one are you gonna pick? You're gonna pick the one that yields more juice. Like it doesn't matter about the price, and even if it was more expensive, you would still pick that one because it's what you want. And if it's even cheaper, then you're really running to that one. It's flying off the shelves. And like looking at it from that perspective, because I also heard in Bloomberg, it was the ECB president. I don't remember her name, but I'm sure you can look it up. She's about to. She's been talking about resigning or whatever. She was talking about the EUR USD, fucking what is it called? The conversion rate. She was talking about that because there was an analyst who asked. They were like, are you concerned about how the conversion rate to the dollar has fell to $1.17? And then she began to speak and then to say, like, essentially, we don't focus on the conversion rate. That's going to move every day as the US dollar appreciates and as the euros depreciate or appreciate. That's just a part of the game. And she was saying that's not what they focus on their monetary policy. So like there are hints everywhere that it is moved by the bond market. So that's what I've been focused on, is thinking like a bond investor. And I don't have it completely figured out. I just stumbled upon this like last week or the week before. And I'm pretty sure you guys kind of saw me moving in that direction when I did my check-in at the pool. Like it was starting to ring in my head because I was just I got tired of being afraid of economic data coming out. And then I also got tired of being angry at the outcome of a trade because I don't understand it via price action, because price action doesn't answer everything. And that's something you learn in it's either trading in the zone or the discipline trade. I don't remember which one, but it's a Mark Douglas concept, right? Where your edge doesn't move the market. Like the reason the market went up isn't because, oh, you got in off of a level of support and it was a breaker structure. That's not why the market moved. The market moved for a completely different reason, which it's because of appreciation and market expectations of that particular currency, the one that's in the front or the one that's in the back. That's why it moved. And like the only thing that your edge does is build that confidence to allow you to ping. Because you have to be able to have that confidence to just ping, send them trades off every time. You can't be afraid. You can't be like, I don't know. I got to think about it. No, it's a replicatable process, but it's not like the market, your winnings are not determined off of your edge. So, having all that information and just sitting there and thinking on it, it began to it just dawned on me. So that's why this past week, I don't think I submitted that many trades, mainly because I'm trying to understand. And my gold trade was based off of me looking at the market as not a economist, but a bond trader. And so was my NASDAQ trade. And then I also made predictions on GJ, which I didn't get to take, but I was looking to take, that it was going to drop. It dropped tremendously. And that was off of the news of the snap elections of Japan with whatever her name is, the new prime minister or minister or whatever. She ended up winning. Well, it's not that she won, but their majority house won, and they're looking to raise interest rates, do interest rate hikes. And the BOE, I believe that's what it's called, the Bank of England, they decided to hold interest rates, and I believe majority of them dissented and said that they want to cut interest rates. That sent the fucking pound down. Like it tanked. And if you look at the chart from, I believe it's, I'm gonna give you the exact dates, and I should go over this in my breakdown. Actually, we may just hop on the charts. We may just do that. Yeah, I'm probably just gonna hop on the charts and then explain it there. So let me see if there's anything else that I want to up. No, we're just gonna hop straight on the charts. Let's just go do that. Okay, so regarding the what was it? We were talking about the BOE cutting, well, not cutting interest rates, but looking to cut interest rates. And also the snap elections happened at the same exact time. I believe that was over here. So you can see news drops, and then we have this major push to the downside, which in all intents and purposes, you can see that this is a resounding uptrend. Like, is it tight? Yes, but GJ always does very tight uptrends, and then eventually it cracks it, like a little bit, but it'll return to a previous level of support and bounce off of there every single time. You can see that just throughout the price. Of course, sometimes we'll get a strong range bound where it's just disgusting because it's choppy on higher time frames. You can see it ranges every now and then. But for the most part, we're buying up aggressively and then snapping that buy trend and going straight into sales, right? So that's what happened, right? But we were low-key able to predict this because of when that happened. So look, we have this level of support that was being created, and I was looking for potential buys, but this was also around the time where I decided, okay, this is what I'm going to do. I'm going to wait because I was going to get in off of that candlestick where you can see there's a rejection right here from 20 to midnight. I was going to potentially get in off of that, but I saw news was coming out. So I was like, I'm not going to take that order because I don't know what the economic outlook is going to be. I have no clue. So I waited. And then I saw what happened, and I didn't understand it, so I began to look it up. What does this mean? What does this mean for the currency? What does this mean for, or how does this play a factor in like the economic outlook and all these types of questions, right? And then I began to see what was going on. So now we have the break that happened and it broke, and I was like, okay, that's exactly what I'm looking for. And then keeping that exact same bias, I was looking for sales off of this area. Only reason I didn't take sales is because on Friday we didn't get close enough to that level that I was looking to get in at. I was looking to get in literally right at 213,774, but it didn't go all the way up there. It went up. Well, it went up on Friday in the morning, and then we didn't have rejections until about 12 o'clock, which is around the time that the market is closed. So 12 to 4, that candlestick, like after that candlestick closes, you can't enter into the market. So then we have Sunday open. Sunday opens a bit higher. I believe I can't exactly tell where it opened with this type of candlestick, but we open around that area. I didn't get any sales there, and then I just decided to just wait and sit it out, which I could have taken this order here on Monday and it would have been smooth sailing, but I just didn't. I was like, okay, this is pretty far, because my stop loss would have been here. I'm like, I don't necessarily know, because my TP would have been pretty far, which it almost hit TP, which is a 5-to-1, which it probably will go hit TP, which is literally right down here, which is, in my opinion, probably a better order than the order that I took. But neither here nor there. So you can see that off of that news break of not only the prime minister being selected, she didn't get selected, she got selected a while ago, but her majority, like the House or whatever the fuck, I don't know what I'm not gonna say it out like I'm an expert, I'm not, but their House, it's like the House of Representatives or something like that, like the ones who make the monetary policy. It's not the House of Representatives. The ones who make the monetary policy, they were like, it went in her favor, because she basically said that she was going to resign if it didn't, because she wanted a majority split, so then she could be able to do what she wants to do when it comes to the monetary policy. So that happens, and then the market just tanks aggressively, right? And this is a big movement. We can't ignore the fact that it just sold from $214, right, off of the break of this news, to a low of $207. That is a 3.3% change in 11 days and 4 hours. Now, to put that in perspective,